Yeah, good afternoon, folks. Just take your seats, get yourself comfortable. I'll be on in just about 3.5 minutes, just doing the final checks. Seeing this dollar pushing up again as we speak. Be with you soon. Okay, good afternoon, folks. Good afternoon. Hopefully, you are well. Just seeing here where you all from. Got a few in from the Philippines. Kamusta ka? If you're calling in from the Philippines, how do I know Tagalog? Because my wife is Filipino and all my children are Filipino as well. That's how I know the Philippine language. Hello there, Marshall, another Filipino living here in the UK, Indonesia, Bulgaria. I was in Bulgaria a couple of years ago. Very nice place it was indeed. And we see Namibia. We've got South Africa. Lots coming in from South Africa. Good to see you in there. I tell you what, why don't you look at my face? It's much better, isn't it? Lots of people coming in from South Africa as well. That's good. Tammy Worthington, hello from you in the USA. Good to see you all. Hopefully, I'm coming through okay. Maybe my admin can tell me if everything's coming through. Or better still, tell me if it's not coming through okay. Brugden Bandit, Norway. Hello, right, okay, good to see you all in the room again. We do this every Monday at this time. It's your chance to engage with me. I know I've got a whole bunch of followers out there. I think we've got something like 240,000 followers. So it's good for me to get on and be able to sort of talk to you and interact with you on a live basis. This is live, as you've gathered, because I've just called out whole bunch of names. So it's your chance to engage with me as well. So any questions you have there, do not hesitate to drop them in the chat. I do have a team of people watching the chat as well. To make sure we don't get spammed, and also to make sure I don't miss anything that's really important. I'll try and catch up with any questions you may have at the end. If I'm going through the spiel here now, maybe it's not such a good idea to ask me any questions while I'm talking, of course, because I might miss them as well. Hello, TJ from Nigeria. Good to see you in the room. So basically what we do here on this little session here, normally about 40-45 minutes, I basically talk about what's been driving the markets, what's been driving the Forex market, the macro markets, the larger, bigger markets as well. I'll talk about what we have got to look forward to this week in terms of the fundamentals, price action as well. Then I'll jump onto the charts, look at some sort of opportunities that we may be seeing out there, and maybe we put in like a 10-minute sort of educational section as well, basically where we just cover some extra education. It's always something to take away. Today I've got a special bonus for you as well, a free bonus that you can take away. It's all about size. Size really does matter. Hello, Bamoto from the Philippines. Hello to you as well. So a little bit of a giveaway, and if we have time at the end, I'll jump onto the screens and see if we can indeed get some trades going off on the lower time frame charts, on the 5-minute, 15-minute chart. I can't promise anything. Last couple of weeks it's not been very active, although we may be seeing something at the moment. The dollar is making another push on as I speak, so there could be some opportunities going on there. We had a nice trade out earlier, which I'll talk about in a moment, in the New Zealand CAD. It's heading down nicely. So there you are. Right, okay, let's have a quick look then what's been going on. Excuse me if you hear the squawk coming over the background. I do always have the squawk going on. That basically tells me, keeps me up to date of anything that I may miss if I'm away from my screens or I'm doing something else. That's always banging out me any of the information or that I need to know about when I'm actively trading. If anything, it doesn't make me any money, but it keeps me out of trouble sometimes. Stops me making silly trades just ahead of a big announcement or something like that. So 999, the dollar New Zealand I sent out earlier, played out nicely. Well, it's a longer term trade, 999, so we've still in that trade, but yeah, it's working out okay at the moment. We'll have a look at that in a moment. So basically last week, I put down Australian unemployment. Australian unemployment came in much better than expected. It was a major event sort of out in the Asia Pacific zone. It wasn't really such a market mover. The Australian dollar has remained under pressure over the last 2 or 3 weeks, and it's actually been a favoured currency of mine, maybe looking to get onto it at some point, maybe looking to sell a currency against it, maybe selling the euro against it, or maybe selling the pound against it. It was one of the trades we were looking at last week. But the data coming out of the Australian sort of zone does seem to be better in terms of unemployment. It's all about unemployment, really, isn't it? More people have jobs, the more people are spending money, the economy's booming, and obviously interest rates move on the back of that, inflation and so forth. So Australian numbers, keep an eye on them. They're doing quite well at the moment. Bank of England, they had their policy decision meeting last week. So as you know, as Forex traders, what we're doing each and every week, we're looking for clues as to what the central bank will do in terms of interest rates. Normally, as Forex traders, we look at interest rate movements. If interest rates are going up, normally the currency should follow. If interest rates are coming down, normally you'd expect the currency to be coming down as well. That's why we're always looking at these monthly meetings. So we had the FOMC and the UK last week. Bank of England started talking about negative interest rates, something that we've not seen here ever here in the UK. But the moment they started talking about negative interest rates, of course, what do you expect to happen to the pound? Well, pound clearly has been coming under pressure pretty much since then. And now with the pandemic that you see going on around the world, and the acceleration certainly here in the UK, and the Bank of England in the position there where it's got to be seen and to support the economy, may indeed have to start moving interest rates. The fact that they started talking about negative interest rates has put pressure on the pound. So we're keeping an eye on the pound. We're trading that to the downside at the moment. And the FOMC, basically, they just confirmed. The FOMC, by the way, you don't know what I'm talking about there, stands for the Federal Open Market Committee. It's basically the Fed central bank. And they are basically saying that they are going to keep their rates. Their rates at the moment are between 0 and 0.25. they've basically confirmed that they're going to be leaving their rates pretty much unchanged for 2023 was the projection before they start moving interest rates there. So with negative interest rates potential in the UK and lower rates for longer here in the US, you can expect both of those currencies to be reacting to that. This week, we've got a couple of central bank decisions this week. We've got the RBNZ, that's the Bank of New Zealand, Reserve Bank of New Zealand. They will basically be making their announcement on their interest rates. Last time out, they spoke about negative interest rates, and oddly enough, the New Zealand currency, the Kiwi, has actually been performing quite well since the last time they started talking about that. If they move interest rates this time, then I expect the Kiwi to come under pressure. Another reason why I quite like that dollar trade that we did against the Kiwi today. So RBNZ statement later on in the week, Powell is testifying. I don't think that's going to be a massive event, although a lot of the analysts are talking about it. I don't think it will be because he's basically said his spiel over the last 2 weeks. Later on in the week, we've got lots of data out in terms of it's PMI, Purchasing Managers Index. It's basically forward-looking data. It's one of the data releases that central banks really like to look at because it's not a lagging indicator. Things like retail sales and and so forth. These are indicators that basically look at last month's data, whereas the PMI looks at their projections going forward. It's basically a survey from the business leaders asking them their sort of view on the economy going forward. Are they optimistic? Are they not optimistic? In fact, if I can show you here, let's have a look here using the magic of this. You can see here the PMI data that we've got out later on in the week. This is basically out on Wednesday. If you follow my mouse here, basically anything above 50% is deemed to be an economy that's expanding. Anything below 50 is an economy that's contracting. When COVID hit, in the spring, these numbers were down at single digits in some cases. But now the economies have picked up. So we're going to be keeping an eye on these PMI data out. We've got PMI in Australia as well by the looks of things, and we've also got US PMI. Look, we've got Wednesday. So Wednesday's a big day for PMI data. Keep an eye on that. Remember, optimism means the economy picking up. Economy picking up means the currency should follow. These are the fundamental things that we look at. And then, of course, we've got the SMB policy as well later on in the week. That's when they decide on interest rates. It's unlikely that they will be moving interest rates this time out. And the other thing I want to talk about very briefly is the stock market. Stock markets are having a big risk-off day today. You see that there on my ticker below me. So there on the whatever it is on the right, I've got risk-off. Risk-off basically means money is moving out of the riskier assets. Just think of it in terms of your own life. If you want to take on more risk with your money, what do? You buy investments. If you're concerned about the money, the world going forward, and you're worried about risk, what do? Well, you go into cash. You put your money under your pillow, or you just leave it in a bank earning nothing. You don't want to take on any more risk, and that's basically what's happening at the moment. The markets are coming into risk off. So at the time of just before I came on the camera a moment ago, stock markets across the board have been massively sold off last week and continue to be sold off this week, as well as the COVID pandemic seems to be rearing its ugly head once again, and all these rates starting to push up across the world. So markets are becoming a bit risk averse at the moment. I see the tech stocks have been massively hit. Some S&P tech index down almost 10% from the highs. But it's risk off, and these risk on, risk off moods that you see in the markets, they do have implications on the on the Forex market, and we are Forex traders. I'm a Forex trader, so I'm always looking at what the stock market, what the big money is doing. Normally the safe haven currencies like the Japanese yen, that's the Swiss franc, and even so the dollar these days perform better. They go up when you have risk off because the money flows into the safe haven assets. And in times of risk on, that's when people are buying stocks and getting all excited about the economy. Those currencies tend to do worse. So that's having a knock-on effect in the currencies. And let me just show you exactly what is going on in the currencies at the moment. And I'll try and keep an eye on the chat as well. Let's have a look here. Right, so this is basically what is going on in the markets at the moment. First of all, I want to show you what's happening to the stock market. Okay, so the stock market is the risk assets. Okay, so this is the Dow. The Dow is the top 30 companies in the US. This level of support that I've been looking here on the daily chart. Okay, again, follow my crosshairs. It was resistance on the way up. Often when we're trading technical charts, old resistance becomes support, and old support becomes resistance. This was resistance on the way up. It acted as support, as you would expect on the way down. Acted as support back there around the 8th of September. Today, we've crashed through that level of support. So there are technical analysts out there. Whether you trade the technical charts or not, there are analysts out there. There are big investment houses with automated programs that will be now looking at this level and seeing this as a potential breach of key structural support. So the pressure is really on the stock market at the moment. This is the, let's say, the Dow. If you go to the S&P 500, which is the top 500 companies as well, look, we're coming right back into this level of support here. Okay, so this is the level of resistance before. Let me just put my little band of resistance there. So you got the level of previous resistance. I would expect this. Remember last week I spoke about support and resistance in our little lesson. We're coming to a big level on the stocks. If these stocks break here, folks, at 3,200, if these break 3,200 level, I would expect a good 5 or 6% drop from there. And remember, when the stocks drop like they do, then you expect to see certain currencies perform better, and that's exactly what's happening on the stocks at the moment. On the FX charts at the moment. You see here, I always talk about this as my key indicator that I use when trading the Forex market. I quite frankly, I have no idea how people can trade the markets without looking at something like this. And this is like our strength indicator. It shows me where the money is flowing in the Forex market at the moment. The money is flowing. This is the 4-hour chart now. Look up here. You see the 4-hour chart. Money is flowing into the green bag. That's why I coloured it green. The US dollar. Money's flowing into the dollar. Money's flowing into the Japanese yen. And look what's happening down with these currencies. You've got the euro, the CAD, the Aussie, the New Zealand dollar, the commodity currencies. These are risk currencies. If economies are booming and investing, then of course they need raw materials. They need raw materials from Australia. They need oil. So these currencies tend to underperform when risk comes off, because if economies are beginning to contract around the world, then commodities and energy, which these countries rely on, tend to come under pressure. So that's what's happening at the moment. You see here the Australian dollar, the orange line, the purple line here, the Canadian dollar, all coming under pressure. Even the New Zealand dollar is coming under pressure as well. So that's basically what's happening at the moment. So it's a matter of risk on, risk off. So don't underestimate the power of looking at the stock market. So we took a trade this morning in our trading room here at forexsignals.com. This is real time. We've got certain strategies that I teach, and this is a classic one. This is what I call it. We call this the naked trading strategy. Okay, so we call it naked because basically it looks at the pure price. It ignores all those indicators that you see. We look at pure price at support and resistance. And I think I've spoken about this a few times to you guys. In fact, there is a video out there here on my channel talking about this strategy. We had a nice trade signal this morning. We took the trade. We took it. I don't know if everyone took it with me. We're about 60 pips up on here at the moment. We're moving closely in now to TP1, which will come in and out. Well, we're halfway there. So that's looking good. We had one just close out last week. Oops, lazy. Let me turn off that man. It's annoying everyone, I know. So we had one last week. It was the pound against the US dollar. I think we took about 350 pips out of that one in that strategy. Nice naked. Yes, I didn't mean to keep it on that long. So all this tech. Anyway, so this is one we're looking at the moment, and I quite like this one, not only from the technical standpoint, but also from the fundamental standpoint. Risk off is going to help the US dollar, and New Zealand dollar should come under pressure. And again, if they talk about negative rates coming on further down in New Zealand, then you'd expect to see this hit TP1 this week pretty quick, I would say. So we're still on that trade to the downside. Just having a look here at cable as well. Pound, that's the white line. Pound is under a lot of pressure. It's mounting pressure. We had a bit of a rally last week in the pound. Fundamentally, I don't know why. Technically, maybe a bit of profit taking. But what you're seeing here is a massive solid rejection of this resistance zone that was used to be our support zone. So that's why we've got an orange band of resistance in there. Risk reward play. This has got to be played to the downside. You remember with trades, trends, they never go in a straight line. There's always pullbacks along the way. And we look for price action to tell us when a pullback is a pullback and not a reversal. And I think this pullback into this level of resistance, putting in again another bearish engulfing pattern in there today, indicates that this currency pair, that's a bearish pattern there. Following on from these candles in here, guys, this is a bearish little pattern. So you're trading this to the downside. You can afford yourself stops above here, with a say 150 pip stop. This has every potential to keep on rolling lower. So we quite like the pound dollar to the downside. Look at the euro dollar coming into this level of support. Big level of support coming in here now. Excuse me. This is the daily chart. Okay, so the daily chart looks at the candles on a daily basis. So we bounced off this level a number of times. We're coming into this crucial level again. Big bearish day today. Markets, whether you trade technicals or fundamentals, the markets are going to be looking at 17.25. If this breaks and closes below 17.25, there's not a lot of support all the way back down, quite frankly, all the way back down to 114, 15 zone, 114, 115 zone. So just look at the price action here. This is all bullish momentum, all these blue candles, long trades taken out. And then we went into consolidation. You've got a naked trade set up at the top there with that bearish pin bar. We talk about that. I mean, obviously it's gone now, but it's hindsight. But obviously it's in there. We talk about it in our room, of course. But that led to us, with a potential hit. If this breaks this level, folks, we are looking at continuation to the downside, I would say. So that's basically the view for me at the moment for the outlook of the charts. We're looking at still seeing weakness in the euro, weakness in the pound, weakness in those commodity currencies, and look to potentially by the stronger currencies against it. I'm sure this person's just about to try and sell me a Forex course, no doubt. Hello? Yeah. Yep. Do I want to learn how to trade Forex? There you go. That would be nice. Must be a $10,000 course. Right. Let's have a look here. Just having a quick look at the chat there. Is the Fed meeting going to happen? Any impact markets? No. KJ, the Fed we've had Jackson Hole, which was where Trump was talking a couple of weeks ago. Then you had the FOMC testimony this week. I don't think we'll be moving markets. There's nothing I don't think he can say that he hasn't said already personally, is what my opinion on that would be. Right, okay, so let's just move on to obviously I know some of you in here looking for views. Those are my views. We'll get on to the charts hopefully and do some scalping in a moment. Before I do, I just want to talk to you a little bit about why size matters. Size really does matter when it comes to trading. Okay, often people come into the Forex market and they talk to me all the time about what's the most important thing they should be focusing on. And for me, well, as you know, there's three sort of pillars, if you like, that make up a successful trader. And you've often heard me talk about it on the channel and so forth. First of all, you've got the strategy. Okay, strategy. Well, you can buy a strategy. I've just talked to you today about a couple of strategies in there. The naked strategy. We do trend following strategies and so forth. The ones I teach. You've got strategy. You've got the psychology. Psychology is by far the biggest issue that most traders struggle with. And then, of course, you've got risk. And I think psychology and risk come hand in hand. If you can sort out risk control and have realistic expectations, then the psychology, you're halfway there to cracking. But you're not going to be able to crack one without being able to master the other. Often people say to me, that's a high risk trade. It's a high risk trade when they're taking trades in the market. Or I might say that you should have a 150 pip stop. I've just mentioned to you there the pound against the US dollar. maybe have a 150 pip stop. Is that higher risk than having an intraday chart trade with a 5-minute chart with a 10 pip stop? It shouldn't be any different in terms of risk, because when you are trading the forex market, we should always be considering risk and the size of each trade that we take. And what I've been doing, see this I put this together a long time ago. Right, this is before I came on to this sort of education platform. But it's something I'm not. Believe me, I don't know how to code Excel at all. But I basically put this together a long time ago, and I've just put these numbers in here now to show you how it works. This shows me that I should never be risking more than a predetermined amount on each trade. Now I know you've seen my risk calculator there in the trading room, but I've got a little gift for you later in a moment, which I want to share with you. But here's the idea of how risk and size should matter. Let's assume I've got a $5,000 trading account, and I want to risk to say just 0.5% on the account. Okay, 0.5% of the account. 0.5% of $5,000 is clearly $25. $25 is my maximum risk on each and every trade. Now, of course, as you trade a currency pair, the size of the trade is determined by the second currency in the quote. Is known as the quote currency. First currency is known as the base currency. Second currency is known as the quote currency. And it's basically $10 for every one standard contract. Again, if you don't know what I'm talking about, there is education there on my channel, or of course you can learn more about it by coming over to the trading room. But basically, each standard contract, the pip value is $10. So, for example, this is because it's against the US dollar, the quote currency, pip value is $10 per pip. Now, you can trade less than $10 a pip. You can trade less than one standard contract, but this tells you exactly what you should be trading. So if I have here a trade that I need to have a 50 pip stop with a 0.5% risk, that's telling me I should only be trading 0.05 of a lot. It doesn't matter if it's a 80 pip stop. Yeah, that means I should be trading 0.3 of a lot. Here, if I'm trading the Aussie CAD, say Aussie CAD for example, Aussie CAD, because of the CAD value against the US dollar is different. Each pip value in the Aussie CAD, in any CAD where it's the quote currency, is $7.56 per pip on one standard contract. Okay, but if I need a 30 pip stop for my $25 risk because it's 0.5%, it tells me exactly what I should be trading. 0.11. As I say, I think Einstein once said, didn't he? Did he say this? Einstein? Have you heard of Einstein? Einstein once said, compound interest. It's the 8th wonder of the world. Those that understand it, they earn it. Those that don't, they pay it. This is how you should be growing a trading account. You're using the same percentage on each trade. When you are having a period when you're winning, your dollar amounts will be increasing. When you're having a drawdown period, as we all have as traders, this is simple, Forex, 1-to-1 here. If you're having a drawdown period, which we all have, and you're using compound interest, the same percentage on each trade that you have, then of course, when you're having the drawdown period, your losses decrease as well. Compound interest, it really is, I think, the 8th wonder of the world. So if you guys are not doing this at the moment, I strongly suggest you do. So here's my giveaway. I'm not going to give away my Excel spreadsheet. It's written too long ago. It's too cumbersome. You can mostly write one yourself. Not a problem. They are, and you can maybe buy one from somewhere. But I do want to share with you this, and you can have it absolutely free of charge. You've got my face there just taking over the screen, so let me just take my face off at the moment. So here is our lot size calculator. It's free. It doesn't cost you a dime. You can save this page. You can bookmark it. I'm sure my colleague, if she's listening in, can maybe send the link to it, or I can send the link if I know how to use it. But basically, same thing. What you do here, you input the instrument that you're trading. Okay, so for example, I might be trading, I just mentioned the Aussie CAD. My entry level, whatever my entry level would be, you put it in here. The account balance would go in there. The risk per trade, so you might be taking whatever it is, or 1% risk on the trade. Your deposit currency, put in where your stop is. Remember, it doesn't matter where your stop is. It doesn't matter if it's 30 pips away, 50 pips away, or 100 pips away. It doesn't matter where the stop is, because you are going to be, because the little tool is going to do all the magic for you, and it's going to work out the lot size for you. So you put the percentage of risk in there, risk on the balance, put in calculator, and it will tell you your exact trade size. So bookmark this now. It's my free gift to you. You can use it. You can share it with your mates. Share it with everyone as well. It's absolutely essential, I think, that you are trading with something like this when it comes to trading. So there you are. Hopefully, let's have a look here. Hopefully, that's been. Oops, daisy. Hopefully, that's been done for you. I'm just going to check to see if you've. There we go. Have we put it in? Yeah, there you go. Thanks very much indeed. Thanks for that, Kim. Free to use. Make sure you bookmark it. It's well worth it. It's free. And the other thing, and I've just been told, we do have a team of coders, developers, and so forth. Basically, looking at all these different tools. We are adding tools, free tools for all of you as well. So keep popping back. Don't forget to subscribe to the channel if you don't already do so. And that way you can get notified, obviously, when these live events happen, and also my latest videos that are coming out. But this way you'll also get to see the new tools as we release them. So there you are. Andrew Gore says, some brokers do this automatically. When you set up a stop loss, you increase the value of your stop. Yes, they do. Some brokers do that for you. Not all brokers do. I know my brokers don't, but some do. Yes, you can get that on certain platforms as well, Andrew Gore. Yeah, not all of them do that. Certainly, if you're using MT4 or MT5, which is the sort of the broker platform that most use when they come into trading for the first time. It's basically this platform. Most of these, this is MT4. It doesn't happen. You need to basically have a tool like that, and of course you can download a tool as well. I'm about to show you. I've shown you before on our live streams when we do the scalping. I've got the tool basically plugged into my MT4 platform, but again you need to download that. Right, okay. Without further ado, let's see what's going on here at the moment. Let me just put my camera over there for a second. So basically we're going to have a look at our scalping trade. We've got basically about 15 minutes. I'm going to look for the engulfers and the pins, and I'm going to look at the 15-minute and the 5-minute chart. If you've been following me at all, you know exactly how this strategy is working. As you know, no trade continues in a straight line, in a trend, without pulling back or retracing at some point. But we don't know when the market is pulling back, whether they are a pullback or whether they are in fact reversing. So I use simple price action. Simple price action to confirm that it is indeed a pullback and not a potential reversal. Okay, so let's just let me just pull that back up there. Yeah, okay, so yeah, you can check out this strategy if you haven't seen it already. I do spend I've done a couple of these live events talking about the strategy in more detail. I will do the same again at some point, but I'm not going to go into it today too much because I don't want to waste too much time. And I'm going to select to see any particular patterns that may be coming up. Let me put my so here you can see I've just selected 15-minute, 5-minute. You can do this on the 1 hour. You can do this on the weekly, the 1 minute, if you want to do the 1 minute, 4 hour as well. Unbelievable success, tool for popping, spotting those probabilities. Right, let's just have a look here. This has gone on. There you go. Keep an eye on that. I've got a couple of things going on that one. There we go. Right, so we've got a pound CAD engulfer. Let's have a view at the pound CAD engulfer. Okay, so this has pulled out a potential sell trade. Okay, let me just put the camera over there again. No, you can't see it over there. Let's put it over there. Potential sell trade. Okay, and because it's got a down arrow, it's been a bearish engulfer. However, we need to see trend on the higher time frame for this strategy. Okay, you can see here again, I've got the risk tool running, 0.5% risk. That's all I'm going to be doing on this. This is the expert advisor. You can see I've got my profit and loss lines here as well. Better way of, not better way, but a different way of doing it. If you can use that tool, of course, that hopefully by now you've bookmarked, or you can do it live on here as well. This is a bearish pattern. We're not going to be taking that one, so we will close that one down. I want to see the moving averages fanned out on the higher time frame. This is the higher time frame, 1 hour. They're not all crisscrossing, so we don't take that one. So switch that one off. Pound Oz 15 minute. Let's have a look at the Pound Oz 15 minute. Okay, well, I mean, you've got a bullish little pattern there behind the pound against the Oz. It goes against the bigger trend, doesn't it? The bigger trend, as you can see, is flat. So we're not taking that trade either. This is the 1 hour chart. 1 hour is my anchor chart. So I always want to see what's going on the bigger time frame chart. New Zealand yen, 5 minute engulfer. Who likes the 5 minute charts? Whoa. Okay. So here we go. So just looking here at the higher time frame. Okay. So we've got a nice pattern down there on the a nice trend on the higher time frame chart. Okay. We've got a potential set up here. Okay, now I'm going to have my stop. Okay, so they are fanning out, pull back into the area of moving averages. On this account, I'm just going to do a 0.5% on this one here at the moment. We are going to have a stop slightly above the 60 moving average. Okay, and I'm going to take a trade with a 1-to-1. Look at the 1-to-1 beside me. Risk reward has got to be at least 1-to-1. Okay, so this is my risk reward. It's going to work it out for me. It's going to work out the lot size for me. And I will take that trade now just for this stream as well. Place this pending sell order. So I've now taken that trade. Everything's gone in. I'm not risking more than 0.5%. None of this. What should I be risking? How much am I going to lose on this one? I know how much I'm going to lose. It's 0.5% of the account. That trade's gone in. So let's keep an eye on that one. I don't know how New Zealand yen. Oh, I'm in the New Zealand yen already, aren't we? New Zealand. No, beg your pardon. I'm in the New Zealand against the dollar. But New Zealand against yen is a good trade. I like it. Fits in with my macro picture. New Zealand yen. This is a 5 minute chart. I mean, it's quite a tight trade. If you're watching me, the stop is basically, if you need to know the exact levels, the stop is around 69.92. Profit target is down there at 69.35. Okay, and that is that trade. I should be looking at the dollar against the gold. Yeah, I was looking at that earlier. Yeah. Looking at the gold earlier. Gold's under a bit of pressure this morning as the stocks come under pressure. Remember last time when we had the fallout in the stock market? Gold plummeted as everyone was scrambling to liquidate or pay their margin calls on their stocks. So gold's normally a safe haven trade, isn't it? Inflation hedge. But gold's coming under pressure now as the stocks come because it did last time out. Certainly, yeah. Okay, so New Zealand yen, we'll take that trade and we'll be done on that one. What else have we got going here? We've got Aussie New Zealand 15 minute pin. Okay, so it's a bearish pin, red arrow, uptrend. We ain't taking that. And lastly, let's have a look at the euro, yen, and golf. Okay, we just had a new one come up now. That one was in the New Zealand CAD 5 minute. So let's have a look at the New Zealand CAD because it's a fresh print. It's a bullish engulfer, I can see. It's a bullish engulfer, which on the, now that was on the daily chart, that would be a buy trade. But anyway, I don't take these reversals on the lower time frame chart, just what I don't do. I'm a trend follower intraday. At the moment, the trend on this one is down, so I'm not going to be taking that one on this strategy. So I'll knock that one off as well. Euro yen, 5 minute engulfer. What's going on there? No, crisscrossing. I want to see, this is the type of environment you want to be trading. Yeah, look at that one there. See that one there, beautiful one in there. Back from a while back, you know, you had a 30-40 pips on that trade, but not this one. We want to be trading. You don't want to be crisscrossing these moving averages. Yeah. What tools are you talking about? You can ask me, Charles. You can ask me. This is the pattern finder. We'll come over to the trading room and talk to me there about it. James Bond. Oh, James Brand. There you are. Right, okay, so not taking that one, but you see there the risk management tool works on the on this as well. We've got about 4 minutes now before the next candle, 5-minute candle closes. So let's just have a quick look at what else is going on here. The Swiss is taking a bit of a bid. Look, Swiss franc's just moving up. New Zealand dollar still moving down nicely, so we're doing well on that one. Still looking good. 15-minute chart. Okay, look at the 15-minute chart. If you're trading these engulfers, we know the trend is down. Just look at this. No, just look at this opportunity there. There's one there. Obviously, I'm in it already, but there's a bearish pattern there. You should be in this trade to another 40 pips. Pull back using a bearish engulfer. It doesn't happen. It doesn't happen. But you've got to have a reason to enter a trade. Nice little trade there. You would have got in on that trade. But I'm short already, so I'm okay. Not quite an engulfer there, but still negative to say the least. What about pound dollar? Look at this pound dollar on the 15-minute chart. If you know the trend is down. Whoa, look at that. Perfect entry there. Nothing on the way down here. Might have got one here. I don't know if that was a pin bar. Might have got one here. You wouldn't have been, you might have got stopped out. Might have got stopped out on that one. Not sure. Not sure if it's a pin bar really. Some, of course, you get stopped out on. But the idea is, look, when you're following trends, there's 2 trades going on. Yeah, well, 3 trades. The third trade is very important. You buy, you sell, or you do nothing. When we're trading, we're just trying to get the edge on our favour. Yeah, just trying to get the slightest edge. Well, if I'm trading the right side of the moving averages, that's my edge. I need 51% edge, and I've got a winning strategy. You know, you can toss the coin, you know, and be right 50% of the time. The roulette wheel, you know, pays 36 to 1. 37 numbers. The slightest edge, and the roulette cleans up every night. So pound and dollar looking lower. What about this Aussie CAD? Is there something coming up in the Aussie CAD? Do you reckon we can maybe sell some of that? Only if it fits our strategy rules. Let's have a look at the Aussie CAD. Down here somewhere, isn't it? Broken through some support there, Aussie CAD. Lower time frame chart. Yeah. Wouldn't have given us any opportunities there, but let's look at the 1 hour. No, not quite. But you can use this strategy on all time frames. I mean, it's you know, all time frames it works on. Right, I've got about 25 seconds. So let's quickly whiz back to the pattern finder. Hopefully it will come up before the candle. Let's just go in, bang, bang. 15-minute, 5-minute, activate scanning. These are the old ones. Let's just see if anyone comes up in a second. Right, we've got about 10 seconds. Nothing? Oh, no trades on that 5-minute candle. What happened to the yen? Pound. Well, the yen basically, Alberto has been sold off massively because of the risk. You know, because the markets are moving into risk aversion. That means risk off. Then the yen, safe haven currency, low yielding currency. You see patriation flows back into the yen currency. Remember when investment banks and houses and hedge funds are buying stocks, taking on more risk, they borrow a cheap currency to borrow. The yen's got negative interest rates, so they borrow the yen. You know, and then they've got the yen, so they need to sell the yen on the financial forex market to buy the currency to invest in those stocks. Of course, the reverse happens, the yen goes up as money gets repatriated into the yen. Right, folks, I'm going to leave that there. As I say, we've just got that one trade going off in the New Zealand against the yen. Let's have a look, see what's happening there. Let's see if it's not doing anything at the moment. Let's have a look. New Zealand yen. There we go, down here. Okay, so it's just moving into profit slightly. Nothing really to talk about. Just about 10 pips up on that at the moment. But it's heading in the right direction at least. Right, there you go. Make sure you think about size on each and every trade that you do in the Forex market. It really is so important if you want to be in this game for a long haul. You want to make sure that you're managing risk on each and every trade, that you're not just gambling and losing, losing big percentages on the ones you lose and taking small little gains on the ones you make. That's the sure, fast way to the poorhouse. So you should always be controlling risk. And that tool that we've dropped in the room there, maybe Kim will drop it in again. If you want to download that, not download it, but you can bookmark the page, use it to your convenience. Absolutely free. Share it with your mates as well. It would be good for them as well to understand risk. Right, I hope you found that useful. I'll see you next week. If you don't come over to the trading room, you can come over to the trading room. 7-day free trial. I'm sure there's a link below here where you can come over to the trial, take a trial. 7 days, I think it is. You get, and then you can talk to me personally. You can. Let me know you've come in from the YouTube channel from this live event, so then I can roll out the red carpet for you, as it were, so to speak. So I can say hello and we can start interacting. So yeah, I enjoyed your company. Thanks very much indeed for that. If you're not going to come over to the trading room, no problems. I'll see you same time, same place next weekend. Have a safe week, guys. Good luck.